Hi. So everyone's freaking out about interest rates and whether we're heading into recession. But while all the smart money is focused on that stuff, they're completely blind to three risks that could actually blow up. And I'm not being dramatic here. We're talking about $239 trillion worth of exposure. That's literally more money than exists in the entire global economy. So yeah, let's talk about it. First one, shadow banking. Weird name, but something very real behind it. So there's basically a parallel banking system that's grown to 239 trillion. And we're talking about private credit funds, all these financial companies that are essentially doing what banks do, lending money, but without any of the protection that banks have. So the ECB, the European Central Bank, recently came out and said these shadow banks can't access emergency funding like regular banks can. So when things get messy, they're screwed. And the kicker, they're all connected to the regular banking system. So picture this, there's a panic, everyone wants their money back at the same time, but these shadow banks can't get emergency cash from central banks. So where do you think they're gonna go? Right back to the regular banks that we all use. It's like a domino effect. Number two, it's possible dollar volatility is about to get wild, and most institutions are positioned for the opposite. So Trump's been talking about wanting more influence over the Fed policy. And whether you like it or not, markets are starting to price in the possibility that interest rate decisions become more political. And that changes everything for currency traders and institutional portfolios. So here's what's actually happening. If the Fed starts making decisions based on political pressure instead of pure economics, dollar volatility is going to spike. So we're talking about massive swings that could happen overnight based on tweets or political news. Most institutional portfolios are built assuming the dollar stays relatively stable and predictable. But what happens when your currency hedges blow up because the Fed cuts rates and help with an election instead of fighting inflation? Then you've got institutions running massive dollar-based strategies that could get wiped out by a single policy shift that has nothing to do with economic fundamentals. And number three, AI is making all the big financial decisions now, right? And we're all just hoping it doesn't screw us. So every major bank and investment firm is using AI to help decide what to buy, what to sell, and when to panic. But here's the thing nobody's thinking and talking about. All these AI systems are starting to think exactly the same way. So at the London School of Economics, John Danielson has been screaming from the rooftops about this. When all the AI models reach the same conclusion, they all act exactly the same. It's like having a million traders all hit this sell button simultaneously. So imagine every major institution gets the same, oh crap, we need to sell everything, signal from their AI on a random Wednesday. That's not risk management. That's a coordinated market crash waiting to happen. So here's where we're at. Shadow banking without safety nets, potential dollar downturns, and everyone trusting AI. You should be thinking about this stuff. Like, do you think your asset manager understands these risks? And if you're an institutional investor, do you have these things on your radar? If you want peace of mind, let's chat. Otherwise, hit the like button, subscribe, and comment down below which topics are on your radar.